Ismail from Uncapped. We're talking funding today. Asher, warm welcome to the show. Thanks for coming on with us.
Hey, thanks so much for having me. Really looking forward to the discussion.
Yeah, me too. So you're a serial entrepreneur. You've been, creating several solutions in this area. I know. So this is a really important one because I would say biggest cap on growth that I see amongst all the clients that I have who do 6, 7, even 8-figure sellers, especially those guys, is funding and getting enough cash to feed the beast that is your Amazon or e-commerce business. So if you're watching live with us or watching on the replay, thanks so much. Do put in any comments or questions you have for Asher on this, I think, a really critical topic. Even if you've never considered taking funding before and you don't even know what we mean by funding, is that just a weasel word for loans? We're going to tell you all about that. And if you do want to get funding of some description and you're not sure how to increase your business's likelihood of getting it or eligibility, then stay tuned and we will address all of those questions and much more. So with that said, we're going to record the podcast, as is our tradition, within the live. So Asher, you ready to roll on this topic?
Let's do it.
Excellent. As born ready, as the Americans say. This stuff. Right, here we go. Ladies and gentlemen, boys and girls, we are inviting you to listen to our podcast recording. Ladles and jelly spoons, boys and girls, welcome to the 10K Collective podcast, the place to be for 6, 7, and 8-figure Amazon private label and custom product sellers, a subset of the amazing FBA family of podcasts. Today, we're talking about funding, which is another way to say getting enough cash in the bank to pay for all that inventory and those ads to run traffic to those listings once you've got the inventory. And we're here with Asher from Uncapped to talk about this very important topic. First of all, Asher, welcome to the show. Thanks so much for coming on.
Thanks so much again for having me.
So we're talking funding. Today, we're going to talk about a couple of different things. First episode, what is funding? Before we get into that, just tell us very quickly about yourself and Uncapped. What's that?
Well, I'm one of the co-founders of Uncapped. And, what we're really passionate about is that founders shouldn't have to give away equity in order to fund their growth. So we provide fast, flexible funding to e-commerce businesses and Amazon businesses for marketing, inventory, and hiring without personal guarantees or dilution. My background is in startups. This is the third business I've started over the years. And, the biggest problem I always had was getting the funding that I needed. I guess working with, hundreds of e-commerce founders, I've seen how they've struggled too. So it's a dream to get to work on Uncapped. Every day I get to help other entrepreneurs get the funding they need. And, our first customers were also my friends. So from the start, we really tried to create something that is really friendly, that's fast and fair and transparent. It's the product I wish always existed. We're now in 22 countries, including the US, UK, Germany, Poland, Spain, and our business has been growing exponentially. We're deploying, hundreds of millions of dollars and pounds to businesses, and we actually now fund more businesses in a day than a typical VC will fund in a year.
Wow, that's quite the statement. Yeah, and I guess VCs famously, and I guess most of us probably aren't going to be getting venture-backed capital, but if anyone comes along and owns part of your business, then they start to get control, don't they? Just as we all know from the horror stories that you go around amongst entrepreneurs, or at least if you haven't heard them, you will if you in this game long enough. So tell me then, we're talking about the word funding. That sounds like a bit of a sort of euphemism that your bank manager would use, meaning a loan, but that's obviously not very sophisticated use of the word funding. So what do we mean by that exactly? It's some form of cash, but tell us a bit more about what the definition of that.
Yeah, funding is capital you use to develop your business. And as you say, we often think about that as a loan because probably investors have been really uncreative when it comes to different funding options. And typically there's really only been traditionally 2 options in order to fund a company's growth. One has been loans. The other one is equity. And, if you think about the ends of the spectrum, equity is on one end because it's an expensive option. It takes a long time to raise. And on the other side, it's really good for funding uncertainty. On the other end of the spectrum, you've got debt, which also can take a lot of time to raise. It can be restrictive for a founder and sometimes comes with personal guarantees and covenants. It's really designed for unlocking liquidity from fixed assets, which in the case of most Amazon businesses or e-commerce companies and other fast-growing online company builders, they usually don't have those. So I guess what we're trying to do at Uncapped is create something in between, where if you know that you have £1 and it equals, if you invest it, you get 2 to 4 pounds of profit over the next 6 to 12 months, we're a better alternative to equity or debt funding for that growth.
Right, and thank you for honouring the British pound there. And obviously, a lot of listeners and a lot of the people in the mastermind, even though it's a London-based, London, UK, London, England, it always amazes me when I have to say that. But I guess there's probably a London, Ontario, or something. But anyway, yeah, whichever currency it is, getting a return on investment means it makes more sense to invest more. I really like the statement. That's a nice, clear definition of a loan that I've never heard: unlocking equity from fixed assets, which, as you say, as soon as you define a loan in that way, it means it's off the table for most of us, doesn't it, really? Because most of us don't own fixed assets apart from, as you say, our personal property that we live in. And a lot of people I know, I think my experience is, if you're looking at over £100,000 or somewhere north of $100,000 in loans, generally speaking, that tends to come with they have using your personal home as collateral, which is pretty scary, right? And I know quite a few people in that position. So it's definitely worth discussing this, if only to have a source of funding that does not involve that rather massive sting in the tail. So let's talk a bit about the pros and cons of other forms of funding. Obviously, none of this stuff is easy to get, but we'll talk about how we get it in the next episode. By the way, if you're listening and thinking, yeah, that's all very well, I want the money, how do I get it? We'll get to that, I promise you. But for the moment, let's talk about the pros and cons. So obviously, equity is one of those things that feels kind of harmless because you're giving away percentages of something that doesn't feel like it means anything at the moment. So tell us about the pros and cons of equity versus debt.
Well, I think, equity is a great source of capital if you are funding R&D, or, you have a business where they're at a stage where, you found something that's working and you really want to scale it incredibly fast. It makes, equity can be a logical solution for that, because you're asking that investor to take a big leap. And, that's where that product is designed, because equity involves taking a big risk, and it therefore comes with a bigger cost. And so, businesses that are at that stage where they're still trying to figure out their unit economics, for example, and, trying to get to market initially, that might be a good option for them. And I guess what we're saying on the other side of it, though, is if you're a business where you actually already have predictable acquisition costs or repeatable growth, there might be better options.
Okay, so tell me about that. I've read this in various accounting books. There's one very good book by Neil Lambert called Romancing the Balance Sheet, which, if you're really into your economics, I think you probably should be if you're building a serious business in this type of business anyway, then it's a good one to read. But he talks about the fact that equity is a very, very expensive form of funding, but it doesn't normally feel like it, does it, when you say you agree with the business partner that you're going to take 50% each or something. So talk to me a bit more about why it's expensive.
Yeah, well, the way equity works is that typically you're giving up 20 to 30% of your company in each round of funding. And, what that means, if you take your total, the total shares in your business, you're giving up that significant chunk. And of course, and once you give it away, you can never get it back, really. Potentially, as well, as you mentioned earlier, you're potentially giving up control. Typically, if an investor is, taking 20% of your business, they'll also want a board seat. And, that doesn't, suit every business, because, for some cases, it can be really silly. If you're planning to take that raise and turn around and spend it on Facebook ads, where you already know you're making a good return, it can feel really silly to give away 20% of your company, knowing that you're going to get that money right back.
Sorry.
I was going to say there's also some other challenges. I mean, there's also real inequity in equity, right? Like 0.05% of companies do raise venture capital, and 98% of them are men. The other part of getting equity can also be angels, of course, and with angels as well, there's potentially a whole other set of challenges about personalities and finding the right person to work with you, who's going to really back your business and understand it and help it grow.
Great. So that makes a lot of sense. The second thing then is this non-dilutive funding that we've sort of been mentioning, or that you specialize in. So non-dilutive meaning what? You're not giving up equity? Is that what we're meaning by that?
Yeah, exactly. So it's talking about, especially as a founder, that consideration of, maintaining your percentage of equity and thinking about, not diluting that share that you own is what we're really focused on. And, I think it really comes from my own experiences as well of, building businesses. When I was trying to build my first company, I was young and I was probably just, looking for 100K. And I probably went to 100 investors and got, 100 no's. And, I think off the back of that experience, I also just saw, hey, it was really hard to think about raising, a loan because, as you say, I didn't have those assets. I didn't have a home to put up. And equally, venture capital wasn't right for me because, I didn't necessarily have the warm introductions or, the connections to be able to go and, secure that type of capital. And, I started to realize as well, like looking at other entrepreneurs and so many of my friends who are also trying to raise money. I wasn't alone, right? It's so common that founders are stuck in that difficult situation where their options are either, hey, how do I either have to give away a big piece of my company or, take on the risks that are associated with debt. And, the current stat is that, at exit, a typical founder who does take on, equity funding, they likely will own less than 15% of their business.
Wow.
So there's a really big opportunity to help founders that are, wanting to own more of their business in the long term.
Yeah, I mean, I guess you get the horror stories from the sort of venture-backed or angel investor. Angel's probably not that a misleading word, right? From what I understand. But anyway, that's more, I suppose, typical in the fast growth tech sectors. I guess in e-commerce, I've not really come across that with the people I know, but there's plenty of people with loans that are based on the fact that if they default on their loan, they will be selling their house and kicking their wife or husband and children into, I don't know what, rented accommodation. So there's a bit of a horror story. So the sort of non-dilutive funding that you offer is not a loan either. So what are the alternatives that you specialize in? Because I think it's important we'll wrap our heads around what the differences are between these sort of financial products.
Yeah, well, Uncapped is a new way for founders to fund their growth. So, we believe that founders shouldn't have to give away ownership in order to get that growth. And so we provide equity and interest-free investments that start from 10K and go up to 5 million. We charge a flat 6% fee on the capital that we provide. And then businesses only repay the capital as they make revenue with no set repayment date. There's no compounding interest, equity, or personal guarantees. Another beautiful thing is that there's no pitching or business plans or coffees, which means that you can really get back to growing your company. Maybe to give you an example, if we were to say lend you 100K to spend on marketing, we take back a fixed portion of your daily revenue, which might be say like 5 or 10%, until we got 106K back. So we don't take any equity or personal guarantees or warrants or other hidden fees. You're just paying that 6% flat fee.
What was that? NVs, did you say? What does that mean?
Sorry, say it again.
You said something like you don't have other NVs or something like that.
Oh, we don't have any other hidden fees.
Hidden fees. Thank you. Okay. Yeah. Sorry. I just wondered if I was coming across some hidden financial term there. So 5 or 10% of revenue, and then so you end up paying back 105K, 106K or something. Okay, that makes sense. And what's the difference between that and a loan then? Because it feels quite similar to a loan. I mean, I guess important to dig into what are the differences.
Yeah, well, I mean, the definition of loan is that it's capital that you have to repay under a fixed term, and also with a set interest rate. And so for us, we don't have an interest rate. It's a 0% interest rate, if you will, and it's a term that's infinite. So in our model, that means that your payments aren't actually a thing that could actually mean that your business actually struggles because it can't actually repay, should your revenue slow down. So, because repayments aren't tied to your revenue, if your business slows down as a founder, you're not cut out, your repayments just slow down. So, for that reason, we believe it's, the most affordable, flexible type of financing available to growth companies.
Yeah, and I have to say, I mean, I'm sort of, we've talked to all sorts of people that will offer lots of different products, and anyone listening, by the way, should do their own due diligence and make their own decisions. But I would say that it makes a lot of sense in a very changeable environment, and COVID's made every industry changeable, I guess. But e-commerce has seen massive booms and busts in the last couple of years, and I don't necessarily think 2022 is going to be free of that. It does make sense to have a form of funding that is also flexible, I have to say. Now, technically, and this may not mean a lot to a lot of people, but for those who are a bit more financially literate, is this a receivables purchase? And if not, then what's the difference between this and a receivables purchase?
Well, I guess typically when we think about receivables purchases, we're often talking about products like, a factoring product or invoice financing, other types of products that probably don't apply to a lot of e-commerce founders, and also come with some of their own conditions. Like typically, those products will mean that there's only a portion of the invoice that you have that you can actually factor, so it won't necessarily be 100%. And if it is, often there's a personal guarantee, or the funds need to be secured by a third party, which might mean like needing to use another third party bank account to deposit those funds. So there's a lot of additional complexities that often come with traditional receivables finance. And what we're trying to do here is actually design something that's really tailored for e-commerce, right? And e-commerce businesses, their biggest challenge typically is getting the funding they need for inventory, right? Because running an e-commerce business, there are tricky challenges up front of difficult payment terms from those suppliers, and being able to get that funding and secure it against your future revenues is what this product is all about. So it's a real match for e-commerce businesses.
That makes a lot of sense. So how do you sort of go about it? We'll talk about how to check if you're eligible or not in the next episode, but how do you typically go about it? You mentioned a typical sort of set of numbers, which is useful. So in that person is borrowing, say, 50K to run ads, and then they pay it back over time, 5-10% of their revenue, and then they eventually pay you back the principal plus 6%. So how does it work in terms of the sort of mechanics of setting it up?
Yeah, well, I mean, getting funded with us is really quick and straightforward, and it's done all online. So there's no credit checks or business plans. The company simply connects their existing sales and marketing accounts, such as like Stripe and Google, basically to our revenue prediction engine. We analyze the numbers to reach a quick, like data-driven decision. And then we present, multiple offers, and you can choose basically the amount of revenue that you want to share. The more you want to share, the more capital you can access. And, one of our beliefs is that we'll never make an offer that we don't think the business can afford. Because I guess, unlike that VC model where they need 1 in 10 businesses to succeed, we need, 100% of the businesses that we back to succeed. And, that model, as I mentioned with, repayments, it's not like that conventional loan where you pay that fixed sum each month. And, the monthly repayments are just linked to the borrower's revenues. So, in those months when the sales are higher, the business makes a larger repayment. When revenues are down, repayments are reduced.
Yeah, it sounds nice and straightforward. And we'll let people know in a minute how to, come and find you guys if they want to explore further your exact product. Before we get into that whole promotion thing, let's backtrack a bit. What do you see as the main errors that people make in the funding area? Obviously, we've alluded to some of the problems from the nature of the product itself. So equity comes with problems, loans come with some guarantees and other problems. What, from the perspective, if we swing it through 180 degrees, from the perspective of people seeking funding, what areas do you see them making that they should be aware of?
Well, my first advice always to folks who are looking to raise money is to just ask the question, should you even raise money today? Because I think for so many entrepreneurs, like raising a big round, has been like the symbol of success as an entrepreneur. And you can't blame them because, all the headlines, of course, are really focused on like who's raised and how much. You don't hear as much about companies that have bootstrapped. But, I really believe that real success as an entrepreneur is actually, building a profitable business, even if we don't celebrate that enough. So, I always encourage founders to think about, if you weren't able to raise this money, how would you make this business work? Because I think, knowing that, it removes the desperation and just makes you much more investable. I think the second thing is probably about just having the right mindset. If you think about, fundraising, it's not easy, right? It's like one of the most frustrating and time draining activities that you as a founder have to undertake as part of your company's growth journey. And especially when you have like a small team, fundraising can just consume so much more time than you would like it to. So, I think if you want to raise equity, especially, I think there isn't really a lot of shortcuts in that process. So, having a strong fundraising mindset, having a strong plan, and thinking through that ahead, expecting rejection and kind of embracing it, all things can really mean you are much more successful in the longer term.
Great. And I guess we're shading there into how to actually go about getting it. And we'll definitely talk about that in our next section. But I really like the fact that if you can't raise this money, how would you make the business work? I like that question because, as you say, there's a phrase in sales, desperation smells. There is nothing like trying to ask for something when you really need it for the other person to reject you. And the irony, of course, of any, and they say this about banks, don't they? Basically, a bank is a person that will lend you money when you don't need it. And when you need it, they'll turn around and say, no, we're not giving it to you. So there is, I mean, that's a bit of a cynical, but you can see from the bank's point of view why that would be the case, or an equity funding or anybody else. So there's a lot of common sense in what you say. And I like that reality check. I mean, I guess the best funding is no funding, just like Elon Musk's famous dictum about engineering, right? The best part is no part. But the reality is for a lot of us that we are going to need funding. And I have to say, I don't know many e-commerce businesses that can grow as dramatically as they want to on organic growth, because the profit margins would have to be insanely high, and they're not normally in a physical products business, right? That's reality. So for those people who are listening or watching who want to find out more about what you do, where do they go and what is it you offer?
Yeah, the best place to find out more about who we are and what we do is to visit our website at www.weareuncapped.com. But we also had, a special offer, and we were thinking was that, if you run an e-commerce store and you're doing at least, 10,000 pounds per month and want to either like scale your campaigns faster or purchase more inventory, obviously we would love to help. And in the last month, we ran this super successful campaign where we, funded hundreds of store owners, and we gave them up to 50K, actually absolutely free. So no fee. Normally we would charge a 6% fee, but last month we did it for exactly 0. And on our website, you won't find mention of this anymore. It's gone. But we thought, Michael, for listeners of this podcast, we'd be ready to make it happen again. So all you have to do is reach out to me at Asher at We Are Uncapped with the subject line Secret 50K and a bit about you to see if you qualify. And we'd really be excited to hear about you and your store, and hopefully be able to help you get the growth funding that you need.
I really like the code Secret 50K. That's very smart marketing, a little bit of intrigue. But that joking apart, I mean, 10,000 a month is a pretty common number. I mean, that's really on the low side these days, not hard to scale to that point. And 50K with no fee. I was about to say loan, but that's not correct. But funding is really, really generous indeed. So thank you for that. So just to recap, it's Asher at weareuncapped.com. And then we just email you secret 50K. Is that right? And then you can unlock 50K for free, which is pretty incredible offer, I have to say. Probably one of the strongest financial based offers that anyone's ever made on the podcast. So that's pretty generous of you. And I guess your sneaky hope there is to create a relationship with people and keep working with them, right? I'm assuming there's going to be a reason you're doing stuff for free.
Yeah, absolutely. I think, we are hoping to find businesses that are going to keep growing. And, our belief is that we're always a long-term partner. So our biggest success has always been funding people and then funding them again and again and again. And, that's what we're hoping to do, create those relationships and hopefully reach out to some of the folks that you're speaking to every day.
Absolutely. And I'm a massive fan of long-term relationships. I think one of the nice things about the 10K Collective Mastermind, which is of the same name as the podcast, we've had people who've been with us for 4 years now. And of course, really seen their journey and sometimes different pivots they've had to make in their business journey and types of businesses. And yeah, you get a lot from following somebody's journey long time. So that makes total sense to me. And that aligns with our mission at the 10K Collective podcast as well. So we're going to talk about in the next episode how to get that lovely cash. But for now, it just remains for me to say, Asher, many thanks. Asher from Uncapped, I should say, many thanks for coming on the show and sharing all about funding options.
Thanks so much, Michael. It was great to be here.
Okay, and that's our first podcast episode done. If you're listening live, we're going to get to the juicy stuff now, where how do you actually get your hands on all that cash? So apart from, of course, Asher's offer, just to recap that for live listeners, email Asher, ASHER, at weareuncapped.com. That is right, ASHER, right? Not messing with
that. Is right.
Good. And just put in the headline, the subject line, Secret 50K. Right then, let's get into how we actually fund this stuff. Here comes podcast number 2. Ladles and jelly spoons, boys and girls, welcome to the 10K Collective podcast, the place to be for 6, 7, and 8-figure Amazon and e-commerce sellers. If you have your own private label custom products, that's our real speciality. And that's part of the family of amazing FBA podcasts for Amazon sellers everywhere. Today, we are talking to Asher from Uncapped, and we are talking about funding. And the last episode, we talked about how to get what the types of funding are. And today, we're going to talk about how to get our hands on that cash. So Asher, welcome back to the show.
Thanks, Michael. Great to be here again.
Thank you. Well, 20 seconds ago that you were here, but joking apart, getting funding is really, really critical. We talked about the types of funding and why you might need it. So today we're going to talk about how to get it. First of all, let me ask a simple question of the sorts of businesses that you guys would be dealing with, so we can define what kind of businesses are in the picture and what kind of business owners should listen up.
Yeah, well, Uncapped is great for you if you are generating sales online for at least 6 months and doing at least 10K of revenue per month and starting to build towards some positive unit economics. But we've seen, this model work for a wide variety of companies, both bootstrapped and venture-backed. And I guess, why we talk about 10K as being a key number. I know you guys have the 10K collective, of course, but for us, we think about 10K because that's sort of the point at which your online business isn't, side of desk anymore. It's probably something where you're starting to think, hey, I could actually make this into my full-time business and into my main source of income. And, really, it also shows that business has some potential, right? It's getting to a place where you've got some real customers and hopefully the potential to scale. Because what we're looking to fund is, businesses that have something that's working and they want to add more fuel to the fire in a really affordable way.
Okay, great. So, by the way, positive unit economics, it sounds a little bit euphemistic. Does that mean you actually have to have profit, or what sort of level are you talking?
Well, I think one of the key tests would be saying, for example, if you take £1 and you put it onto Facebook and you say you get £3 out of profit over the next 6 to 12 months, you're probably in a good place to be able to scale that business. And, that's kind of a simple way of thinking about measuring that.
All right. And for those who sell primarily on Amazon, which is the main audience for us, any sort of basic rules of thumb of the sort of people?
So a similar way of framing is that, when you're thinking generally about what you're investing into growth, how long it's taking you to pay back. So if you are, investing in, getting what all the costs that you're putting into making a sale, how long is it taking you to repay it? Are you getting, paid back within, a reasonable time period? Or are you making a multiple, say 3 to 4x of, what your costs are going in? And that's a simple way to think about unit economics.
Yeah, so you're getting some kind of decent return on investment within a reasonable time frame. So let's talk about, give us a couple of examples of how people figure out, in fact, let me ask a better question. First question then is, how do you assess if your business is eligible for funding? Now, obviously you have a specific funding product that you offer at Uncapped, but let's make it a bit broader to maximize the value for listeners and watchers. Generally, how are you going to assess if your business is eligible for any kind of funding?
Well, I think the first part we talked about previously was just making sure that you have a plan about how you're going to use that capital, and you understand why you need it. But also, depending on what type of capital you're going after, what are you willing to pay to get it? So, typically any type of capital, there's going to be a cost involved. And we talked earlier about equity, giving away 20 to 30% of your business with products like that. If you're taking out a loan, you might be, taking on some risk of signing a personal guarantee. With, Uncapped, you're paying a 6% fee on the capital that you get, which is, a flat fee. So it's needing to understand that and, making sure that you can afford that cost. But then also it's saying, hey, depending on what type of capital you're getting and how you're going to use it, is that capital going to help me achieve my goals? And for us at Uncapped, we're talking to businesses typically which are in a growth mode, right? Because they've got something that's working and they really want to accelerate that growth. And they're looking for a partner to, help them take it to that next level. And so, for us, those are the companies that we're really excited to talk to.
That makes sense. So you're in growth and you're willing, you've thought about how you're willing to pay it and why you need it. And it's quite surprising to me sometimes that you get people on Shark Tank, which is obviously equity funding from VC. So like the scariest possible form of funding possibly. And they sometimes pretty vague about why they need the money. They're going to kind of throw money at things and hope that it makes the effect. And of course, if you put money into a bad system, it's just going to accelerate bad results, I guess. So a good point that you have to have a goal. And it strikes me that reaching out for funding of any description even if you don't end up following through on it, is a very good exercise in clarifying how you make use of your funds, because I don't think a lot of people who don't have to reach out for loans or equity or anything necessarily have that plan written in their business. At least the ones that I speak to sometimes do, mostly don't. So it's a good sort of litmus test, isn't it? Okay, so then after we're assuming that we've got that clarity, how else do we maximize the chances of getting funding?
Well, I think with that clarity already, you're off to a great start, right? Because any investor you're approaching, if you have clarity about how you're going to use those funds and how it's going to help you grow, what kind of results you're going to generate from it, that's going to put you in a really good spot to have those discussions and more maximize your chances. But of course, generally, it's also about just building a good business. So, hey, if you're building a business where you are, as I said, doing well in terms of the returns you're generating for what you're investing in each individual customer, that means you're setting yourself up for a business that is ready to grow and probably is ready to use more capital. There's other times, though, it's like having clarity, right, about how that funds would come in and really help unlock growth. So many entrepreneurs that we talk to, especially in the e-commerce space, they struggle with balancing cash between inventory and marketing, for example. One of our first customers was this fashion brand called Headwind. And, like so many entrepreneurs who are in fashion, they would basically have to wait for the current season to sell so they could invest the returns in the next. And that just like really limited their growth. And Alex and Anna are the founders of Headwind, and they're incredibly savvy. So they came from, finance backgrounds, and they looked at all these different options from, VC to venture debt, because they had this very particular challenge, right, where they wanted to just unlock this growth. And we ended up, working with them and, gave them a $50K advance at the end of 2019. And they used it to, increase their inventory. And, with that new funding, in one quarter, they saw their revenues grow 11,000% compared to the previous year. And so, when you hear about stories like that, and they're so common, right? I can see you nodding, that, so many founders are in the same state where if they could just access that additional capital that would allow them to invest, they just have this really clear business case about how they could really unlock growth. And so, we love to see stories like that, and help more entrepreneurs get to, their full potential.
Yeah, 11,000% revenue growth is not subtle. That's a huge jump. So tell me a bit about the use of funds. And so you've talked about the balance of inventory and advertising, and that is obviously for anyone who sells on Amazon. I mean, advertising is becoming an ever increasing percentage of costs. And obviously inventory is like the core cost for any e-commerce business. And that's why I think that everyone has to consider some kind of funding options. As I say, consider, I'm not saying you should take loans or the advances from Uncapped or equity or anything else, but if you've got to do your numbers right. So what would you say are the classic mistakes that you see people making? If there's some, applying, maybe not to you personally, because you have quite a sort of easy application process by the sound of it, but typically for loans or equity, I know you've been on the other side of the table yourself. What mistakes do people make in that use of funds, would you say?
Well, with use of funds, I think, if you're starting from a place, like, as you said, if you're those folks who are going on Dragon's Den where you don't know exactly how you're going to use your funds, that's probably opening you up more so to being in the case where you're not really optimizing the opportunity. I'd say also sometimes it's just people missing out on realizing how funding could actually help their business accelerate. For example, so many founders in this last period have been really struck because of the tremendous supply chain challenges that we're having, right? And for them, on one hand, they would say, hey, I can't, afford to go and order a larger quantity of inventory because, hey, I just don't have that capital in my business. But I've also seen, so many other entrepreneurs really make that into an opportunity and negotiate with their supplier to, order a larger shipment, but say, for example, get a 10% discount. And then, of course, work with a partner like us where we charge a 6% fee on the capital. And actually now they're in a place where they made a positive return on that, and they're not stuck in the case where they don't have enough inventory to support their customers through a busy period. And so I think it's just making sure you take advantage of those opportunities and do the planning and spot them in your business.
Yeah, I really like the reference to the inventory and supply chain and things. The biggest insight that I think has come through in the last year from the mastermind. And some people have been in generation for, business, for many generations. I'm not personally, obviously it's not possible, but they've inherited it from fathers, grandfathers, whatever. And some of these guys are super savvy small business operators. And the big result of their thinking this year is very simple. Don't go out of stock on your best sellers. Incredibly simple insight, not easy to do. But what you just said is you put your finger on the fact that there is just a monster opportunity cost if you go out of stock. But if you stay in stock, by what you just suggested, not only are you staying in stock and not missing out on all the sales, but you just put forward a proposal for a financial structure that means that you're actually getting a return on investment, actually better profit than you were before you took funding. Even though funding traditionally feels like a cost, if you get a return on that investment that's built in from the start like that, that's super smart financial engineering, as it were. This is a reason why Amazon itself can grow like Topsy, because they pay like 1% for their loans, which I know is not the form of funding you offer, and then they get a 2% return on it. They're already golden, right? So I think that's a nice example. So let's talk about the mindset. We mentioned before that it's tough raising funding. So I guess that's kind of a bit news to a lot of people, right? Because I suppose if you haven't tried to do it before, then it seems like, well, I just reach out to a few people and ask for some funding. We're profitable. It should be fine. So what you said before implies to me that it's a bit tougher than that. So tell me about the choppier road and how to deal with it.
Yeah, well, I mean, I always encourage founders to really develop their fundraising mindset, and I would say it centers around probably 4 core ideas. The first one is to plan ahead, because fundraising is a process and it can take time. It's rarely quick or painless, maybe for the very select few. And I think the earlier you start your planning and your process and developing the relationships, the better off you'll be. And actually, the more likely you're going to avoid fundraising in desperation mode. The second one is to expect rejection. And especially when you're raising equity, of course, I think you really have to embrace rejection as part of the process. I mentioned when we were speaking earlier that, in raising, money for my first business, I got, 100 no's before I finally got, somebody to actually say yes and make an investment. And rejection will happen, for good reasons, sometimes for dumb reasons, and many times for reasons that will just forever remain a mystery. So being ready for that mentally, I think, is a big help. The other part is, practice makes perfect. Every meeting is like a form of practice that makes you better for the next meeting. And, the success or failure of one meeting is just never the end of your story. It's just a step along the way. And then finally, I think it's about learning from the past. If every meeting you go to, you can analyze what's said in those meetings and learning quickly and to improve your mistakes. It's the most critical step to finding the right investor more quickly. Just like how, we're used to analyzing our company's metrics, you can keep track of, how people connected with your pitch, and you can write down all the questions you were asked, and, make sure you follow up on the requests. And, if you're finding, you get the same type of questions very often, it's a chance to consider whether you should incorporate that into your presentation or just, add them into your appendix. And then, finally, it's, practicing first with probably some of the investors who aren't your top choices, right? I think, getting some practice with some, first, 10 or 20 investors and building up your confidence so that you can really get your pitch perfect means that when you now get to that investor that you are really keen to work with, you're going to be able to convince them and have the answers and hopefully, land that relationship and get that yes. But on the flip side, what we would say at Uncapped is, of course, if you want to avoid that whole process and actually you'd rather focus on, spending time with your customers, growing your business, and, getting the capital you need much quicker, hey, we would love to speak with you too.
I was just about to say, we feel like we're getting to the sort of offer a little bit earlier than I was hoping, but like you've outlined just how much work it can be to raise equity. So I guess we better tell people what you guys offer. And I know we've got a special offer for Amazing FBA/10K Collective podcast listeners.
Yeah, well, briefly, what we were talking about earlier was that, Uncapped is a new way to fund your growth where, we don't take any equity or personal guarantees. And we offer, between 10K and 5 million pounds of capital. And we do it for a flat fee. That's, typically 6%. And, in that way, businesses, don't have to do any pitching or creating business plans, they can really focus on growing their business. And we've helped, thousands of businesses do just that, and done it across, multiple countries. We're now actually in 22 countries. So in the US, the UK, Spain, Germany. And what we're trying to do is really give founders this new option in order to fund their growth. It really helps them, reach their goals specifically designed for e-commerce. And the offer that I wanted to suggest was that, in this last month, we ran this really successful campaign where we ended up funding, hundreds of store owners, and we gave them, up to 50K absolutely free. So for no fee. Normally we charge that 6% fee, but last month we did it for exactly zero. And you won't find it mention of it anymore on our website. It's gone. But Michael, for listeners of your podcast, we were ready to make it happen again. So, all you have to do is reach out to me at Asher at weareuncapped.com with the subject line secret 50K and a bit about you to see if you qualify. And do it now. Don't wait. It takes 3 minutes, and we'd be really excited to hear about you and your store.
Nice. Well, yeah, free money, always worth having. I know that the mastermind members, when the British government offered some government-backed loans, I think it's called bounce-back loans in the UK, and I know that US had a similar sorts of system that basically everyone grabbed it because it was interest-free, backed by the UK government, and I think that was about £50,000. So definitely free money worth having. So again, to recap, Asher at weareuncapped.com with the headline Secret 50K and a bit about your business. By the way, just a quick check, who is eligible for that? Is it country specific, USA, UK, EU, anyone across the globe eligible for that, or there are some limitations on that?
No, we're doing it across markets.
Okay.
So no restrictions. It's kind of one of our beliefs in general, as we're really trying to be open and try to make things available to everybody.
Great. And by the way, your winning mindset, I love what you said. I mean, for all that, of course, what you do is remove all the necessity to be so amazingly good, but nevertheless, I've just got to recap what you said because I think it's so great. Planning ahead, expect rejection, practice makes perfect, learn from the past. I think if everyone took that approach to each product launch, they'd be better. I mean, expect some products to be rejected by the market. Each product launch is a form of practice for the next product launch. If you keep making the same mistakes, learn from the past. It's not just funding that requires that mindset. I think if that was a really sort of, in a nutshell, you put an awful lot of things out there that I see the best people in the masterminds do, and a lot of people fall at the first fence, which is they get rejected once by a market, by a lender, by an equity partner, and then they stop. So not giving up and learning and practice makes perfect is fantastic. I guess the phrase practice makes perfect really resonates for me as a former musician, and I still keep my hand in with little bits of piano teaching to take the strain off my wife. Practice makes perfect is like the number one thing any piano teacher will say forever and ever, and it's true. So I really like that mindset sort of piece there as well that you've given us. So the only other question I've got for you is there another question that I should have asked you? And if so, what is it?
Well, I'm not sure if there's another question, but maybe I would just summarize, I guess, by saying I think we're in this unprecedented time of interest in e-commerce. And I think, so if you're a brand that could use more fuel for the fire, I would definitely say, strike while the iron is hot. And, I hope some of this information was, helpful to listeners in your journey. And I hope also it's opened people's minds a little bit to other ways to grow their business. We talked about how equity is, the most expensive way to fund a company's growth, and because of how long also it can take time to raise. And I think our main message would be, founders now have more options than they've ever had in order to fund their growth. And I'd really encourage everyone to check those out and, figure out what's the best way, not only for your investors, but what's the best way for you to grow your business.
Amazing. Yeah, really love that note at the end. I think you're right. There are so many people like yourself out there creating all sorts of opportunities for e-commerce business owners, which puts us in a really strong position as business owners, and that's a fantastic place to be. But as you say, this is a moment in time. Things may change, and so it's, as you say, striking while the iron's hot is extremely important. So yeah, really encourage everyone to go and check out Uncapped if you have any kind of curiosity at all around this stuff. Great content. Just remains for me to say, Asher, many thanks for coming on the 10K Collective podcast.
Such a pleasure, Michael. Thanks again for having me. And really looking forward to keeping in touch.
Me too. Great, that's the podcast, folks. So if you're watching any of the video channels and you've got any questions for Asher, then just pop them in the comments, and we'll try and make sure I'll sort of monitor it every so often, or my team does. We'll try and feed those back to Asher so we can get a little bit of input. But other than that, just a quick recap of the offer. I mean, it's pretty simple: 50K for free. That's a little bit of a good offer to at least explore, in my opinion. So just reach out, Asher at weareuncapped.com, with the headline Secret 50K. Asher, thanks so much for coming on live with us today. Really good content. I like it. Straightforward offer. You've obviously done a lot of work in the background there to create an offer that's so simple to use for people. So that's all to be grateful for. So thanks so much for coming on live with us today.